dear traders, today's Tuesday, June 28th, and I'm glad to see you online and present to you with a fresh market review prepared for InstaForex. What good news happened the other day? The US reported upbeat data on pending home sales and durable goods orders. It certainly reinforced the US dollar against its rival currencies and also gold. Amid such fundamentals and the technical picture, my bearish trading plan for gold remains valid. The same is true about the euro-dollar pair. Now let's discuss these ideas on charts. We begin our analysis with gold, which is trading in the red. Yesterday, gold opened with a gap after the weekend in light of the news that G7 countries would trim gold exports from Russia. In response, gold surged in value and traded higher during the European session. Later on, gold declined amid the upbeat economic data from the US, though the metal came under strong selling pressure during the New York trade. I want to show you that gold was also sold in a few previous American sessions. American traders bought gold on Friday. From my viewpoint, the metal is set to trade lower in line with selling sentiment. I foresee two swing lows ahead that were hit in light of the news on inflation and something else. I guess the price is likely to fall to the lows soon. Gold faced resistance yesterday in light of the good data. My conclusion is that gold will continue its decline. I expect the same scenario on the euro-dollar pair, and let me remind you of the sluggish bullish trend on the daily chart. It doesn't disrupt the selling trading plan that was drawn up in early June. I still believe that the euro's fair value should be much lower unless Christine Lagarde suddenly raises the key interest rate higher than expected. For this reason, the euro is keeping afloat because investors anticipate a rate hike by the ECB. At the same time, the Fed will also raise the funds rate soon. What's going on with the euro? Yesterday, the euro weakened following the strong US data, but previously had hit on 1 week swing high. There was a false breakout. It is slowly creating higher highs. If you bought the euro-dollar pair a couple of weeks ago at highs, you should still hold your long positions. If you opened short positions, the price made a downswing and an upward retracement. Now the price is slightly below the 50% Fibonacci correction. It doesn't cancel the selling scenario. If you are serious about selling, you should place a stop loss 2000 pips up and a take profit at 121. If you are not so serious, you could open short positions at the current levels and limit your losses above yesterday's American session, that is 300 pips up, and set a take profit 2000 pips down, that is 1210. I'm sure that the soft bullish trend will be ruined by bearish candlesticks. If you take yesterday's American session and today's Asian session as a downswing and apply the Fibonacci grid, you see that the pair is now trading at the 50% Fibonacci level. Entering the market at the current price, we place a stop loss 250 pips up and a take profit 2000 down. The same story is about the pound sterling. Yesterday, the pound made a false breakout at highs. I wouldn't be surprised if the pound drops to the double bottom like the euro. What about the dollar-yen pair? The good US news of yesterday pushed the currency pair up, so the dollar-yen pair is still hovering at highs. I don't have any trading ideas for this currency pair. Last week was sluggish, and I guess we could consider short positions in a couple of weeks. I expect the Bank of Japan to come up with slightly hawkish statements at the next meeting. Tomorrow, the highlight of the day will be the US GDP data. If the actual data is strong, gold and the euro will continue on the downtrend. Besides, we should not miss comments from Jerome Powell and Andrew Bailey. Tomorrow will be an eventful day, so I suppose the market is anticipating such events to boost volatility. That's all I wanted to tell you today. See you online soon. Bye bye.